Hello, Jim here. A number of years ago, I was looking for a way to make some extra income and I stumbled across selling options. I had no idea where it would take me. Since then, I've been on a journey to learn the right way to trade options. I've gone from making about 1,000 a month to making between 7 and 8,000 on a monthly basis. Today, I want to share with you how I got started, how I chose the brokers that I chose, how I took the first steps to kind of take me on my journey. I'm also going to share with you one of the stocks that I like right now. One of the key first steps, I think, at this point is selling what's called a cash secured put. So I'm going to share with you one of the stocks that I think is currently at a great value for selling cash secured puts. So stay tuned. I think you're really going to enjoy what I have for you. Okay, let's go ahead and get started. I do want to share just a few minutes about my journey. About 12 to 13 years ago, I was in a Barnes& and Noble looking at books, trying to think about some ways I could make some extra income. I stumbled across a finance book that had a chapter about trading options. And at that point, I decided this is interesting. I need to look deeper into it. And I couldn't find anything on YouTube. There really was very little out there. So I did the next best thing. I'd had a long-term relationship with Schwab, so I decided to talk to them and called the trader desk. They set me up to trade covered calls, level zero. I think I could do cash secured puts and covered calls. And then they walked me through doing my first covered call trade on Coca-Cola. And for a number of years, that's all I did. I would pick a price. I'd say, well, I'm okay with selling Coke at this price. And I would, sell a couple covered calls on maybe 200 to 300 shares. And it worked out really well. It was a nice income stream for many, many years. Then I had a bunch get assigned away from me, and it became pretty apparent I had no idea what I was doing. So I decided at that time I really wanted to learn the right way to trade options. And that's what led me to doing this. At that time, I decided to do a lot more research, watch a lot more videos and kind of dig deeper. And that's the reason for this video. I want people to save time. I don't want them to go through and make all the mistakes I've made, picking the wrong expirations, the wrong deltas, doing things kind of in the wrong order. So this video will be kind of how to get started. I'll share some of my insight with working with Schwab as well as Fidelity. I've had a little bit of experience with Robinhood and a few others. But by far my longest experience is with Schwab. Like I said, I started with them a number of years ago. I've got, where I can write checks with them. I can do debit cards, credit cards. You can do that pretty much with both Fidelity and Schwab, which has become really handy over the years. I typically will use Schwab to write my big checks. So if I have to put a down payment on a house or buy a car, I will literally write a check out of Schwab. And then it has a lot of other stuff that you can do. I also have done what's called a pledged asset line through Schwab. What they do is they'll set up an account. You can move a bunch of your assets in there, and then you can actually get a loan. And I did that to help me buy a vacation house at one time. Also used it when I went through a divorce not too long ago to get my ex into a house that was fully paid for. So it's another piece that's really nice. And they also have really good services. They also helped me with moving money around, so I did not have to get attorneys involved again for the divorce. So, since they helped me so much, they're still my favorites, even though recently I've moved all my retirement accounts over to Fidelity. Now you may ask, well, why would you do that? I had a relationship with Fidelity also for a fairly long time. My 401k at AT&T has been at Fidelity. At one point, I decided to compare my 401k to how I was doing trading options, and I found out I was doing a lot better trading options than I was in my 401k. So at that time, I moved the funds from the 401k into an IRA and started trading options within the IRA. At that time, I also learned that Schwab doesn't really have a true sweep account. They do, but it only pays 0.45%. if you want to earn the higher interest rate, you've got to move money back and forth between a money market, especially in the retirement accounts. You have a little bit more wiggle room in taxable accounts, but in retirement accounts, you don't. But in Fidelity, you do. They have what's called a true sweep account. So all the cash that I'm using to trade puts, I have access to some really good interest. It was originally just shy of 5%. Now I believe it's like 4.5% since the rate cuts recently. But because of that, I realized I could earn a lot more interest, and it's been significant. I've been amazed how much interest it is. So at that time, I decided, well, I'd rather have all my retirement accounts in one place and all my taxable. So my taxable are at Schwab, and then I moved all my retirement accounts from Schwab over to Fidelity. I had an IRA, I had a Roth, and I had a SEP account. All three of those I moved over to Fidelity, and now I actually trade in Fidelity as well as Schwab. And I do think that Fidelity also has some things that Schwab doesn't. I know they have a pretty nice HSA account that you can also trade in, that Schwab, for some reason, at least to my knowledge, does not have an HSA that you can set up. So now I have a relationship with both. What do I like about each? Of course, I like Fidelity's interest, but I prefer Schwab's functionality. I prefer Thinkorswim, and even the old portal for Schwab is just easier to use. So I do kind of prefer to do more trading, or would prefer to do more trading within Schwab. With Fidelity, you have to take some extra steps. If you want to manage a trade, meaning you have a vertical put credit spread or something along the lines of what's called a multiple leg trade, meaning you might have where you bought a put and sold a put. To get those broken apart, you have to make some phone calls. It's not as easy to use potentially as Schwab. So I won't go into a lot of detail about that, since this is kind of the beginning learning video, but I like them both. Now, a lot of my members also have relationships with Robinhood. They all, Tasty, and some others. And a lot of times they have kind of a primary account at Schwab or Fidelity, and then they use those other accounts as kind of feeders. So I know one particular member has both Robinhood and Tasty, and he's feeding some of the cash that he makes in those two accounts into Schwab. And you could do the same thing with Fidelity. So some of the other brokerages like like Robinhood or Tasty, I kind of suggest that you use them as not your primary account. Look at Schwab or Fidelity as your primary brokerage account. And then when you're ready, setting up access to the account, you could do like I did. You could call in and sign up, and they typically will give you 0 access. Now, I will warn you, if you call them up and say, I've never traded options, they would say, well, that's great. We can let you paper trade, but we're not going to let you trade for a while. And it can be anywhere from 6 months to a year, especially if it's a small account. So if you're just getting started, you could potentially do some trading in Robinhood or something else, gain some knowledge. And then when you ask for access, for option access, you can suggest, well, I'm doing 4 trades a month, which is like, 40 or 50 trades a year, or 1 or 2 trades a month, and 20 or 30 trades. But again, be honest, but don't be so honest that they don't give you enough option access that you can do what you want to do. So just wanted to share that. Now, I also suggest to my members, and I have a lot of brand new members, people who have never traded before. And once you get started, I suggest setting goals. I like to set goals from the very beginning. When I started my journey, I would set a monthly goal. I started at 1,000, then I went to 2, then to 3, then to 4, and so on until I got to 8. And at that point, I realized, well, 8's a little bit it's causing me to take too much risk. And then I went back to 7, and that's where I stand now. So set some goals. You could set a real low goal, like 1 or 200 a month if you're brand new. Or you could say, well, I want to pay for this expense, this phone bill, this car payment, and look at it that way. But it is important to set goals and then kind of review how you're doing and adjust those goals higher over time. A lot of people just want to learn to trade and they jump in and they don't really have goals. And then, they're not trying to reach for something. And I think that can be a big mistake. You can end up, it's almost like the squirrel syndrome. You'll chase this strategy and that strategy, and you won't be focused enough. So, and that's really it's what's key with selling options or trading options to earn some pretty good income. It's slow and steady. It's not get rich quick. At least, some people are kind of selling the point that you could potentially get rich quick with it. I suggest not to do that, especially in the beginning. If you feel real confident and you become a very advanced trader, then maybe, that's something you should be looking at. And I do, like I said earlier, I have some members who are making more than I am, some who are doing zero DTEs and taking a lot more risk and doing really well. But I found what works for me, and I suggest you do the same thing. Slow and steady works for me. I'm 59. I've got another year when I hit 60, and I'll be able to start withdrawing money at 59 and a half. So I don't have a lot of time to make a big blunder and blow up my account and let it recover. So to me, it's slow and steady. And then what also is key is emotional maturity. A lot of people start trading options and they see like a negative value in their account and they bail on that trade and take a big loss. You need to kind of know what you're doing, and you need to kind of, not be emotional, kind of stick with a trade longer than you might think you should. Or ask someone else. If you join a membership like mine, and if you want to learn more about my membership, look at in the description will be a link to my 3 memberships. And I think a membership like what I have works out really well for people. You can ask questions. I know in my Discord, I've got a lot of members that are helping other members. I have people sharing other videos. I don't get annoyed if people share videos from other YouTubers or other, like there's a lot of videos about SMB Capital. There's a lot of videos from Tasty. And it helps me too, because a lot of times people will recommend videos that I watch. So getting into a membership definitely will be helpful and will help you, grow as a trader. And it definitely is a learning experience. It's a journey. That's why I call it a journey. I get the question a lot of how much can I make? Can I make what you're making? And it all depends on the individual. Also depends on your accounts, where you stand. If you're young and you have very little, very small accounts, it's a little bit more difficult. But if you're near retirement and you have really big accounts, then it may be a little bit easier to earn something along the lines of what I do, or potentially do a lot better than I do. So just wanted to share that. Now, what's key with any of these experiences, learning to just do basic trading or to sell options, is to start with a real simple trade. And that's what I want to talk about next. And I'm actually going to share with you at the very end a trade within Fidelity and what it looks like and how I set it up. So, so I like to pick a company that I like, that I prefer it if I've worked with them before. And then I like to look at debt. I like to look at equity. I like to look at all those characteristics that identify it as a good company. Also, do they have good management? Do they have a good product? And once you've identified that, then price matters. So you don't want to overpay for some of these stocks. Some of the stocks currently are very, very pricey. So pick a price that warrants, you wanting to own it, meaning I like to go out to the 5-year chart and look to see, is it overpriced? I also like to look at PE. Is the PE way out of whack compared to the sector? But at some point I will identify a price that I like that stock. Then I know if I pick a strike price, or I pick a strike price that I want to own the stock at, then it's a lot easier. It also makes it a lot less risky or even emotional, because I know I would love to own that stock at that price. So I don't worry so much that, is the trade going against me? Because if it goes against me, it means I own those shares and I could potentially own a stock at a great price. So once you've identified the stock price and the stock itself, you can actually do what's called a cash secured put. And that I'm going to share in the next part of this video. I'm going to share with you one of my favorite companies to trade on, and how to set up the trade itself, how to use the option chain, and kind of how it all fits together so you can do your first trade, and you can do it in a safe way, not a crazy way. So stay tuned. I think you're going to enjoy the next part of the video. Okay, now I'm in Seeking Alpha. This is a tool I like to use to find stocks and find all the information in one place. So the stock I'm going to talk about and share with you how to trade is Square. And it's currently priced at 65. It's, not near its all-time high or its 52-week high. It's also pretty far away from its 52-week low. It currently has pretty good earnings per share. Only has an 18 PE. You'll notice the PE of a lot of these mid-cap tech companies are way up there, like Palantir's over 100. So that looks good. I prefer, a company that has a relatively okay PE, and they do. And then I like to look at earnings. I'll look to see how they're doing. And what I like about what Seeking Alpha does, you can see they've been increasing earnings quite nicely. They're significantly year-over-year earnings is going up nicely. So I will also look at growth. What do their growth looks like? A+, so they've got good revenue growth. They have good earnings growth. Profitability is a little lower than what I like. Return on assets and return on capital is not the best, but overall they have, pretty good, not great profitability. You can also look at their financials here. So I can look at the balance sheet. And what I want to look for is debt. So if I come down here to long-term debt, long-term liabilities, long-term debt, you can see it's about $5 billion, it looks like. And it's been going up, but not by crazy. It's gone up maybe 600 million in the last 2 to 3 years. So it's $5 billion. What does their total assets look like, or total common equity? So 19.3, and then their debt is 5. So it's like a 0.25 debt to equity. So they don't have a lot of debt. I like 50% debt to equity. So everything looks good. So at this point, I found a company. If I go back and I look at the price, it's almost right in the middle of their band. What would I like to own this at? Well, probably maybe 60. You can see it's kind of in the middle, 60, or maybe even 55. Could I pick it up at 55? So somewhere in the area of 55 or 60, and that's the strike I would typically use in this instance. So next I would come over here and I'd look at the option chain. Now the option chain exists. Every brokerage has one. You can also find it on Yahoo Finance, but I'm looking at Square. You can see here block, and I'm looking for November 15th. I can go farther back. There's plenty of expirations available. I like November 15th. It's 43 days out. I like expirations between 30 and 60 days. So in this case, I would come down and I would look at 60. So here's 60. And then over here, it shows you delta. So I could make $2.68 at 60. So maybe 55 might be a little bit better. I like that amount, but I would end up, I would be paid 268, between 268 and 272. This is delta over here, this 29.19, which is a bit higher than I like to go. I usually like to go more like a 15 delta. So I would pick this 55. And again, we talked about between 55 and 60. It's not overpriced for this stock. and I would pick up anywhere from 141 is the bid, or 145. So someone's asking to be paid 145 and someone else is bid to pay 141. So it's only a few cents difference between those, which is usually a good sign. The other thing, again, to keep in mind is 43 days away. So at this point, I would come over and I would look to trade the option. So in this sense, I would set up that it's options that I'm wanting to do, that the symbol is square. I'm doing calls and puts. So I'm selling to open one contract of a put. I'm expiring it on November 15th. It's a $60 strike, so I'm going to lower this. We were looking over here at 55. Yeah, 55. So we want to come back to 55. So here's the 140 and here's the 144 and the midpoint's 142. So again, bid, ask, and then midpoint. It's just halfway between these two. Now the midpoint will become, when I talk about setting up the trade, the midpoint will become, it's more important than you might first think. So next I would come down here. I'm doing a limit order. I would say, I would look at somewhere between these two. So what I typically do is I'll do an ask, and then I usually will come $2 off, which puts us right at the midpoint. So a lot of times you can pick the midpoint. So here it's telling me the estimated order value and that it's a 65-cent fee. And then I can actually preview the order and place the order. And right at that moment, I make the order $141.35 will be put into my account. Now, when you click on preview order, it just gives you kind of an overview of everything. So you are sure you're making the trade correctly. And it's always a good idea to be sure everything looks good, and then you can click on place order. I'm not going to do that currently because I have several positions in Square, but Square is a company I like. I don't think like I said before, I don't think it's overpriced, and you can do fairly well with it. So that's what I wanted to share with you guys. And this is a cash secured put. So if we go back, it's called a cash secured put because we're just selling a put. And this is one of the basic strategies. So you're selling the opportunity for someone to sell you Square at $55, and they're going to pay you $141.35. Now, what can happen if block goes up or doesn't come down anywhere near 55? This will just expire, and you get to keep all the cash you produced from this trade. And that's where you can make a lot of money with it. A lot of times it will expire. Probably 70-80% of my trades or either expire or I close. So that's kind of the beauty of it. And every trader page typically kind of looks like this. Well, it'll show you what the max gain would be. So again, 142, what the max loss would be. And that's like if the stock went to zero. So that doesn't really make sense. I mean, Square isn't going to go to zero. And then the break even is 53.38. And that's just the 55 minus, what you're bringing in with this cash here. So it's a really good way to get started. Once you've learned cash secured puts, then you can move on to a lot of other strategies. So for my members, a lot of times I say, just get your first trade done. Give this a try, see how it works, get used to it, follow the trade, and then, learn from it. And then you can make your next trade and you could potentially do it on a different stock or take a little bit more risk or potentially look at other strategies. So that's what I wanted to share with you guys. Let me know what you think. Did I miss anything? Or if you just have general questions, if you're brand new to options trading. So as always, thank you for taking the time to watch a video, and I hope you have a wonderful day.